The major markets all closed firmly higher last week, as the S&P 500 traded to new all-time highs on the first day of summer. Going into the week, the markets were poised for significant gains ahead of the FOMC meeting and press conference. Analysts anticipated that there would be no changes to the Fed funds rate. However, it was widely expected that the central bank would position itself to take a more accommodative stance in future meetings. To that end, the Fed removed the word patient from the policy statement published Wednesday. Amazingly, the CME Group's FedWatch tool has now priced in a 100% likelihood of a rate decrease at the next FOMC meeting in July, despite the Fed not directly stating such in any of their verbiage. Powell did state that many participants now see the case for a somewhat more accommodative policy has strengthened. Ultimately, the minutes read that the committee will continue to closely monitor the implications of incoming information for the economic outlook and will act as appropriate to sustain the expansion, with a strong labor market and inflation near its metric 2% objective. While the S&P 500 jumped at the release of the Fed news, the most significant gains made last week took place at the open on both Tuesday and Thursday. Thursday's gains were prompted by renewed optimism of trade talks after Reuters reported that talks between Beijing and Washington would resume and the two nations' leaders would meet at the G20 summit at the end of this week. In the end, all 11 sectors finished higher, but the gains were minimal in consumer staples, materials, and financials. The top performer was energy, as oil prices surged, increasing the S&P crude oil index by roughly 9% for the week. Prices spiked on the news that Iran shot down a U.S. drone, fueling international tensions. The U.S. claims that the drone had been flying in international airspace at the time of the attack, despite claims made by Iran that it had been flying in their airspace. This follows a prior attack by Iran on 2 U.S. oil tankers, and consequently new U.S. sanctions on the country. And finally, interest rates fell yet again last week, with the 10-year testing the 2% level before closing at 2.07% on Friday. Shorter-term rates fell more substantially, as the 3-year closed at 1.79%.